I'm sorry, I had to stop the song early. I fucking love Eminem, but I can't have a song running for 6 minutes before our price action review, you know? How's sound? And also, can you guys see my screen? Here in a second, of course. Let's actually make that high quality a little bit. Someone give me a confirmation. Can you hear me? Can you see me? Well, not see me. See my chart. I always say that. Perhaps at some point I'll get a webcam on. We can see you. Awesome. Not creeped out at all. Blonde hair? Nah, I'm a pure blood ginger, brother. He couldn't be further from the truth. Here. What a day. What a fucking day, right? I know it's going to be a hard one because I know a lot of people just destroyed what they did. Josh from 2 Degrees, I was just in a call over there, and he said it best. He said, in one day, we just destroyed everything we did up till now in the month of December. In one day, and more precisely, in one 4-hour candle, right? Just with FOMC, we did 1,000 points almost. That is crazy movement, right? And we've seen that before, of course, right? We've seen that recently, kinda, right? We saw it. We're used to that movement, but it's still a hell of a surprise. So, definitely a huge move for NASDAQ today. I know a lot of people probably got destroyed on this part, but I mean, it is what it is, right? There isn't much to say here. Just from the overnight price action, we'll look at it. We'll look at how you could have known to short, of course, but definitely a huge down day. And when I say bullish until proven otherwise, this is otherwise, by the way. So in case that wasn't clear for the people who are here more often, this is otherwise. And I understand this call is now is 4:30, so we might start to get a little bit of a different audience here. So first of all, thank you guys for being here today. I'm going to try and adjust to everyone. So have some calls be earlier so that people can join in, and then have some calls be later, which is just a better time for myself specifically. Looking at our charts, right? What do we see? Well, the daily doesn't tell us much, right? Yesterday, expecting at least a retracement. That was, of course, to be expected, right? So definitely bearish for Tuesday. But now coming into Wednesday, what did we say? Well, we expect a Wednesday reversal or a classic week. So if we expand very aggressively on Monday, retrace on Tuesday, Wednesday will either reverse or continue to the upside, right? Those are the two possibilities. And of course, there are two inverse possibilities, but these are the two possibilities. And if we look at 15 in our 15-minute chart at New York Open, we traded above, right? So this is good for shorts. Why? And it's kind of hard actually, so I'm going to go in replay mode here and hide this. It's kind of hard to see your charts when you have 1,000 handle move to the downside. If we look at this, what do we see? We open, and then we expanded to a low, right? Pretty aggressively expanded on the open. Okay, cool. Can I frame this as low of day? Well, let's look at it. Is there SMT at this level? Of course, I'm in the 15-minute chart. There is big time SMT just all the way down here. Right? So you have time, you have everything. You could frame this as low of day until proven otherwise. When London, and now I don't have my session indicator, so let me just plot it. For me, it's all about session profiling, right? When my daily bias is unclear, like it was today for myself, I had two possible outcomes, right? It was either we go down and we're going to start our long-term movement retracement now, or we're going to keep going higher for no fucking reason, just because we're at all-time highs and we're just bullish, right? We're just going to keep going. So how do I decide which of these ideas? Well, I profile based on my sessions. I'm going to use session highs and lows and see that overnight we took out London highs, and we actually took out London lows as well. Just from this, both sides of London being taken out, this is a low probability day. Even though there is FOMC after, there was a lot of movement before FOMC right? Which compared to the full daily range, not at all, right? But we already were trading almost a 1% day before FOMC. So from that point on, I already knew it was going to be a weird one, right? But from this, you took out both sides of the range, created a breaker, had a big expansion lower, enticing these lows. And yes, of course, that's right at New York Open, so we'll look at it. But just from this initial expansion lower, you can only frame two things here, a continuation lower or a retracement higher. And yes, of course, I say you can only frame two things, and I give you both sides of the market, right? So of course, in that direction, it's a little bit complicated. But listen to the first word. I know that any move higher will be a retracement. I know that any move lower will be an expansion. So my daily distribution will be I accumulated, then I manipulated higher, distributed lower. New York is going to retrace since we already expanded a lot in the overnight session, and then we're going to continue with FOMC. That was my plan going in the morning. And as you guys might have seen in the futures chat, I actually took a long. I was looking to trade early this morning because coming into the end of the year, right, where 2 weeks left of trading, not even 1 week left of trading before the end of the year technically, it's definitely not high probability conditions. So trading before FOMC usually will lead to better trades because this is clear. We're manipulating, we're engineering liquidity, we're playing a range, right? I'm trading a retracement into a range. And just so I can put my objective back, how do I find my objective? I do premium and discount of my range. And now it's probably going to be on the wrong side. Yes. Premium and discount of my range, first premium and efficiency. In this case, we did not even respect it, right? We went higher, actually. But this is still my objective, right? This is mechanical. I don't decide. This is what I look for specifically when I'm going to be looking for a retracement objective, right? It's first premium and efficiency. Currently, I'm looking for an intraday retracement, right? A session retracement, pretty much. So that is my intraday chart, 15 minutes. Going down to the 1 minute chart, where did you get an entry from that? Well, right on open, we did a Judas swing higher, right? With SMT, important to point out. So from this point on, I couldn't consider anything other than shorting. And truth is, I would have shorted this right away, but I didn't get an entry, right? For me, here, there was no entry. And yes, you can say I'm going to short there, but as you can see from this box, which if we go back, let's go back to a daily, that is my daily bullish fair value gap. So if I'm looking to long, I'm going to be looking to long in this blue box. I'm not going to be looking for a short. So this entry here was just too late for me. And if we look at the stop here, 44 handles, and I'm already at my target, there is no possible trade in my book. So I just wanted to point out that I would have been looking for a short. I just didn't get an opportunity to short. So then that leads me to taking the long. And as we induce these highs, I did not require it to form the breaker right away, right? So that's something I wanted to point out. I treated this as a breaker early since we formed equal highs here. And the important part is without SMT, right? So if there was SMT at this high, then I would treat it differently. But since we did not form SMT at that point, let me just bring that up. At that point, in my mind, this is inducement. What is inducement? We're adding more liquidity to this level higher. And I'm trying to grab the line here to this level higher. So that just gives me additional confluence and additional confirmation that we are going to break this level and that I can treat this as a breaker block and I can take an early entry, even though this is not yet a unicorn. So that's what I did today. And I had a stop right at this candle's low, the first expansion. I had 3 PD arrays right here. I have inversion fair value gap order block. And I was looking to target these short-term equal highs right here as my partial objective. And then, of course, I was looking for higher, right? Possibly going all the way up. But these short-term equal highs are your 15-minute fair value gap. That was a beautiful trade in the morning, which you don't usually tend to see on FOMC, well, before FOMC. But that's how I was looking to engage today. And I'm glad I caught my piece of it. But that was the harder one to catch. And then your unicorn, for example, if you waited for it to become a breaker would have been here. So entering on this fair value gap. And if you look at the 3PD array stop loss rule and the target, it's the same thing as the short. This does not allow me to take a trade. I don't know that it's going to run all the way up here and offer me 1.6R, right? This is my partial objective. I can't take this trade. And even if you say, oh, well, look, I'll place my stop right here, have a beautiful stop loss right there, it's still not enough, right? So there's no justification for me. What you could have justified is after this target is met, and yes, of course, there's another 15-minute fair value gap. We're going to go look at it here. I hate this. I hate seeing this right now, and it's messing up all on my chart's alignment. There we go. There's another 15-minute array here, which is the one we respected, right? So let me just do this so we can differentiate them pretty easily. Right here, we're respecting this. What did we do? We formed a bearish breaker. Does this mean I can short? Yes, 100%, right? So you could have taken a short there. Once again, the higher probability trades will be at FOMC or after, right? I'm sharing these since today I personally traded, and I want to bring you guys along more in depth than just telling you, okay, well, the Rise model did this. Okay, well, I've been trading for a year and a half. I don't limit myself to a Rise model. But as you can see, even my entry in the morning was all centered around the fact that we are making a unicorn. I'm just entering early, and I'm going to scale in if that unicorn arises. Would you consider 940 a breaker with 941 SMT? So 941 SMT right here, 941 SMT. What SMT? I don't see SMT. I only see higher and higher. Do you have specific candles, perhaps, that you could tell me? 940 a breaker. 940 won't be a breaker unless there's SMT at those lows. Oh, that's what you're seeing. Okay. My bad for missing that. So this, which, yeah. If this got taken out, what does that mean? Well, not 940, but 939 is a breaker block. But when does that become a breaker block? After this candle closes and this candle closes, because you need this to be a swing point, and the swing point is a 3-bar pattern. So you still would not have had an entry in this, nonetheless, right? So definitely, but yes, 100%, this is a breaker block. Just did not provide an entry, and for me, it was all framed around this breaker block. Just to get back in line with the short, right? Very simple. You're once again in your 15-minute, oh, that's not what I was trying to do. In your 15-minute array, you form your pattern that you look for an entry. And then what are you looking for other than this? Closest PD array in line with your direction. That is your inverse fair value gap, which means that you would have entered right here with a stop where, well, one PD array, inverse fair value gap. So your stop would be at that fair value gaps candle, giving you a pretty nice RR, right? Just even to low-hanging fruit. I'm always talking about this, but right, the low resistance liquidity right here, right? All these failure swings, there is no defense. It's just going to accelerate until it gets to this point. Once it gets to this point, now there's defense, right? And there's consolidation here. This is the easiest way you can always find a target. Kane actually calls it a logical liquidity objective. That's just a very nice name for what that is. But for me, I'd look at a 15-minute if I can, and if not, go down to the 5-minute. See, 15-minute, there is this discount order block, but it's pretty much a very tight range. So that's why I like to go to the 5-minute, have a little more in-depth. And I'm just going to remove this range. What is my first discount array? This one. Right, so I can see it on a 1-minute chart. But if you want mechanical logic, right, for objectives in general, that is something that you can find directly in the Rise Trading model video is 5-minute chart, first premium or discount and efficiency. If I'm going short, it's going to be I'm going to be returning to a discount, right? So discount and efficiency would have given you a very nice trade there, right? Definitely. But that's all us talking about what happened in the morning. pre-FOMC. Let's be honest. Today, if you wanted to trade, you would have wished to be in for FOMC. And truth is, if you took this short, you could have held on and been part of this move. Moreover, where was the SMT? I'm pretty sure there was some pretty big SMT. There we go. So as I said, I was looking for a continuation higher all the way up here. I forgot to mention it, but look at this SMT. SMT with our overnight highs, while we've met our retracement objective, that is a beautiful short opportunity. Now, moreover, actually 1050 to 1110 macro, spool against profitable AM traders. Definitely a very, very beautiful setup. But the truth is, you shouldn't be trading before FOMC. In some very specific cases, I'm going to expect a nice move before FOMC. And that's what I did today. But I took the long and then I was done for the day. I didn't even want to engage with FOMC. Now, of course, I do regret it. But looking back at my charts, it did not even give me an entry that I could have taken. So at least I'm a little happier about that. But definitely if you took this short, you could have held on all the way. There's always going to be a good trade, right? Every single day, even the day where you lose money, you're going to find a good trade you could have taken. You're never going to be happy with your results, or at least I'm not. That's a problem that I have personally. I'm never satisfied with my trading results. I could make 200 grand in a single day. I'm not happy. Why? Because I can make 300. I can make 400. Right? So you'll never be satisfied with what you achieve until you stop. So today, I got my trade. Could I have gotten more? Yes. Did I want more? 100%. But I stopped, and now that money is going to go in my bank account. That's something that you have to remember. Do you think that it is too risky to be in a trade before FOMC? Well, on any other day, I would tell you no. But on this one, yes. Truth is, Justin, you're going to engage with prop firms and live capital a lot differently. So see, on a live account, on trading, on high impact news days, you're going to have increased margins, which means, like, for example, for me, on my 70K live account, I could only trade 2 contracts today due to the increased margin. So it's stuff like that. Like, you are very limited and it is very volatile. So it's just not worth it. What's the maximum I'm going to make? 15R. What's the max I can lose? All of my money. 100% of my account. So is it worth it? Not at all. But if we're talking prop firms, Justin, then that's a different story. Because you're trading in a simulated account, right? By the way, if you guys did not know, prop firms, even when you have what they call a funded account, you're still in a paper trading account. They're just paying you for your wins until you make too much and they either bring you live or they ban you, which is fair. Right? They offer you a great tool and you'll never get banned before making a shit ton of money, right? So you really shouldn't be scared about things like this, but I do want to point it out for people that aren't accustomed to it. But when you're trading on a prop account in a simulated environment, there is no fucking margin, right? The only thing that will limit you is based on the prop firm that you trade. Some have rules for news. But basically, like, for example, I'm pretty sure my funded futures does not allow you to trade news. And if you're in a position before, you have to close it. But I don't think they verify that on challenges. Don't quote me on this. I definitely just tell you, go on their website. Every prop firm I utilize, well, actually, I'm trying out a new few ones, which basically every prop firm I'm funded with, I'm just going to add them to our official banks because those are prop firms that are paying me out, so they are legit, right? Because I'm not very well known. I'm not one of those trading influencers. So if they're paying me, they're going to pay you, right? They don't know me. I'm only affiliated with Apex, and that is actually my funded futures too, but those are global affiliates. They aren't private affiliate partnerships. It's really just anyone can have an affiliate link, so I made one for Rise in case you guys want to support Rise directly through it. Definitely a lot of different ways to engage based on basically what kind of account you're trading. But just from this, what is the trade today? There is no trade. Truth is, one of my students come to me and they tell me I didn't trade today, I'm like, good job. That's it, right? I anticipated from the morning, so I decided to go aggressive. I was half risk. I just wanted to trade. That is the truth. And I told you guys, I would not have even traded this December, just like I did last December, pretty much. I did not trade last December, last 2 weeks of the year, pretty much, of trading. So why did I trade today? Why did I trade Monday? Why am I going to trade tomorrow and Friday? Well, it's very simple. I have nothing better to do this year. So I'm just going to be on my charts, stay in my vibe, stay in my routine. So I'm just going half risk, and I'm not trading my live account. I'm just trading my props, which, to be honest, if I lose, I really don't care. I'll just buy one and max leverage until I pass it in one trade. Why? Because for me, it is positive EV to do so, right? Once you're consistently profitable and you've made a lot of money from props, it's just worth it to just keep buying them. But looking at this, to me, there is just no way I can justify a trade, okay? And yes, it's sad because it is a lot of movement. We were a few points pretty much from getting, from them halting trading, right? So you got to know, on these big down days, there's not much you can do. And I always teach my students to wait 15 minutes after FOMC to look for a trade. If you looked at 430, you had a beautiful unicorn right there, or right at 231, sorry. So you had a beautiful entry here, but I always tell them, this is still bullshit, just wait for here. And yes, you could have taken a continuation here, but where do you place your stop? Well, this is all low resistance, so technically my stop should be somewhere here. And that's 200 points. Okay, let's use the 3 PDRA stop loss rule. That's 100 points. Do you really want to engage in the markets when it is this volatile? No, you want to be positioned beforehand. If you weren't positioned beforehand, well, here you were just being a spectator. Once again, that is my opinion. There's probably a bunch of people who traded this, caught the wave, who traded the trend, and who are super good traders and managed to get those trades. But it's just not something that works for me, right? So I just trade in my own way. It makes me money, and I share it online for the people who need help there. Yep. Definitely a lot there, Julius. Definitely a lot there. I'd say I try and keep these calls simple because most people who are coming in here, right? A lesser known Discord that doesn't even charge for what they do, right? Because let's be honest, guys, if I would charge money, there would be more people in here. Because when people see free, they don't see value. When people see free, they see, oh, well, that must be shit. What's going on in there? If not, they would charge for it, especially in the finance world. I would charge $25 a month and we would have 100, 150 members pay every single time and be in these calls. That is what I personally believe. But I don't want to do that, right? I don't want to spend my time doing that. Having a paid community is not my intent. And these calls are not meant to be complicated and me telling you about all the sauce I know. No, it's meant to be the easiest way that I personally trade. You have a mechanical approach. You trade that mechanical approach, you'll make money. It is that simple. I hope you guys enjoy that. Do we have any questions about today, right? This bullshit of a down day? Yes, sir, they are, Justin. Yes, sir, they are. But they don't know. By the way, I do want to point out, if you haven't entered the Rice Statistics giveaway, which I just posted before this call, definitely go look, right? You can find the official link to the Twitter in official links in the Discord, right? Under Rice Statistics, you'll find the X account. And you can see our most recent post. We're giving away 3 lifetime access to the app. If you don't understand what lifetime means, it means it's going to be free forever for you. And we're not even 5% done with that app. There's going to be so much in there. There's going to be so much. And we're not stopping at statistics. There's going to be a lot more within it. I'm going to stop the recording here and tell you guys, why not?